So, happy Monday once again. Let's just quickly get some housekeeping stuff out of the way. You guys know I have a few affiliate links. If you ever want to use one of them, feel free to click the link in my bio, and you can support me that way. Let's get to the news. This week is a big week. We got the federal fund rate, and I think this is Powell's last federal fund rate. And it's crazy to think about that because we always, wait to see what Powell's going to do, what's Powell going to say, and move the market. So it'll be interesting, to see, whoever comes next and how that's going to go, right? But nonetheless, we all know what happens when there is a fund rate. The news drop is that the market really starts to slow down to a certain extent because it's moving in anticipation of what that federal fund rate's going to be. Not expecting much to change, truth be told. But you can see we're starting to chop today already. So I don't know what's going to happen tomorrow because it's another orange folder day, right? So could see something still. I mean, when we're trading IFVGs, even if you're trading unicorns, depending on what you're looking for, like I think even Matt today took a unicorn trade. I think he took a unicorn trade, and I don't think he got to the full TP of where he wanted to get to because just that's the momentum seemed to have died off. So I think he may have taken profit early. I didn't watch the live stream. I'm not sure if you guys did, but it did look like that to me. Because normally when he takes TP, it's like $1,000. And today it was like 263. So I was like, oh, he must have taken a partial. And he says, I need the process nailed on first, still learning. I'll know when I look forward to my weekends. I'll have made that freedom. Yeah, I joke around about the weekend, but I mean, depending on where you are in your journey, like you got to grind. Like you got to grind all day long. It's got to be like, when you're cooking or when you're like doing some other type of work, it's always going to be in your head what you should be doing and what you're looking for. Like you're always replaying these things in your head like a sports player, right? Visualization, so to speak. So you got to hustle during those weekends because you got the time off. That's where you got to like back test. I mean, we have all been there, depending on where you are, but like we've all been there, and I can't tell you how much sacrifice I've made to things that were around me. You almost lose your mind at a point too. It's crazy. But I will say the second you start to figure it out and things start to make sense, and I always talk about trading IQ versus your trading personality, but when they connect or they get kind of like they work in harmony with one another, that's when you gotta like stop working so hard. It actually is going to go against you. And this is where I see people who are strategy hopping. They won't stick on one system and they'll strategy hop, and that's when you start getting into that cycle. It's a very dangerous cycle. So if you start to get comfortable with what you're doing and what you're seeing on the chart, and you know that there's a history of success or profitability trading a specific style or a model, whatnot, or a set of concepts, you need to double down on that. You need to go slow and prove to yourself you can be profitable. The best way to do that, to know if you're profitable trading in a specific way, is if you trade normally with an eval and you pass. To me, that is one of the best feelings you will have, next to getting a payout, of course. But the thing is, it's in steps, right? In stages. You need to pass that eval in the way that you would normally trade if you were in a funded looking to get to payouts. If you can do that with the way you're trading, that is a huge, huge win, because any one of us can just do the one shot, one kill style method. Even if you're still allowed to do that, I don't even know if you can anymore. But the thing is, when you do it that way, it's a 50-50 shot. Like, you're not really trading, you're gambling, right? It's a risk. And yeah, you're expediting the eval, but you're not trading. And the problem with that is, if you don't have the ability to trade successfully, you could expedite as many evals as you want. You're going to blow them all. Okay. And I'm proof of that because that happened to me. So it can happen. It could happen, but it did happen to me. So I'm assuming it could happen to everybody else. But the second you start to trade properly and you pass that eval, that is the proof you need because you can now double down on all the things that worked. And how do you double down on those things? Well, you have to journal. You have to, participate in maybe a 20 trade challenge or a 2190 challenge. You need to put yourself, to work. So anyways, enough of the motivational stuff. If you guys got questions and stuff, feel free to drop in the chat. I really do appreciate everyone being here today. This is recorded, so hopefully there's no glitches or anything like that. Did everybody check out the replay on the Friday session? I did manage to get that posted yesterday. I know it was a little late, but my apologies. Okay, so let's talk about what's happening today. So we're going to do a quick market rundown, NQ, GCCL. I'm gonna literally show you guys how I trade FVGs again, but I'll go I wouldn't say slow, but I'm gonna really show you what I do, like how I mark up the chart, so you can you can see exactly what I'm doing. Any one of you can emulate this. I think the thing that matters the most is understanding the nuances. I've done my best to try to help everybody out with those nuances. If you go to my channel, if you go to Trading IQ, I have placed this graphic here of the model that I'm trading. And yeah, it is, Zanu. And I've even put my notes here. These are the nuances, right? And I may have to change some things, but I do believe this is the best or the most up-to-date things that I've noted that I'm trying to follow. So if you ever get stuck with a question of like, oh, how do I do this with the IFVG or whatnot, just go to my Trading IQ thread and just scroll up a little bit. You'll see IFVG game plan. Just check this out and refer back to it because this is literally what I'm doing, but it's on paper. And I highly recommend for everybody to put your plan on paper. Now this is, for me, this is on Notion. So, digital paper, right? But it doesn't matter. Just put your process down. You need to do this. If you don't do this, you have nothing to work with. Okay. So you can check that out. And then let me just go back to what we're going to talk about after that. So we're going to talk about IFVG sizes and what that means and how we can determine like a good IFVG setup versus like a bad one. And it is very subjective, of course, but I do try to put a bit more of a mechanical touch to this thing. We're going to talk about some of the trades I took today and that I kind of saw and we spoke about. And then also we're going to talk about SMT with NQ and ES, especially when, we're looking at key levels to get swept. And it's like, what asset do I trade? If you're static and you only trade NQ, then you'll only trade NQ. But if you're going to trade one or the other, it's interesting to note like which one you would trade. And I'll give you guys some examples of what you could do. And then also some of the risks that are involved too. So let's start off with the market rundown. This morning, I'm going to go to higher time frame bias in my thread here or in my channel. Today, let's go to NQ. So today, yeah, usually, exactly, yeah. Murphy's Law, right? The one you're in is the one that doesn't move, 100%, or is not the cleanest one. Always the case. April 27th, that's today. So, last week, PA did continue higher. We're pushing new all-time highs, and anytime that's happening, you kind of have to, I say have to very loosely, but like you don't want to go against the trend if it's continuing to be aggressive. From a technical perspective, though, if you're sweeping an old swing high, you would technically want to be shorting, right? So I just, from a technical perspective, was thinking ERL to IRL, bearish bias. Of course, price went higher. This morning, however, this is what we're looking at. And I know that there is a FVG in the middle here, which price sweeps into, and then if you go to the hourly, you'll see that it then sweeps higher and sweeps out this liquidity. So when I woke up this morning and I logged into the charts, this is what it looked like. It's 837. So to me, the most recent thing that price has done is it's that it's swept an old swing high. Of course, it's the previous all-time high. So once again, I'm thinking, yeah, I know everyone's going to probably want to be bullish here. You don't want to go against the trend, but we are still sweeping an old swing high. I'm going to maintain the bearish bias. So ERL to IRL, right? And there's a super tight FVG here. We have a volume imbalance down here. There is liquidity, right? We do even have a sell side liquidity level here, which price could just, sweep this and go higher, of course, which is fine. I'm just looking for ERL to IRL. That's basically what I was looking for. So let's go back to the chart. Let's go back to NQ 4 hour, and I'll just remove everything off my chart, and we'll just examine what price is doing. So this was that candle that was in question, and if we look at it from this perspective, while I'm looking for ERL to IRL to align with that bearish bias, the second price closes the 6 to 10 a.m. candlestick sweeping H4 sell side liquidity, my bias has to flip now. Okay, my bias has to flip. You have the confirmation. What is price most currently doing? It has swept sell side liquidity, which means flip bullish. Okay, remember the trend is not dead yet. So if we're bullish, let's go to the 50-minute. What do we do? And let's just get rid of some of the things that might clog up our chart a bit. So if we go to the 50-minute, we can see price continuing to dump lower and lower. Now, right at about 9:45 is where we get that sweep. Okay? And then at 10 o'clock, which is about right here, that's where we know we have the confirmation that H4 SSL has been swept. So bullish bias right about here. Let's see what's happening on the 1 minute. And let me turn off the IFVG indicator. Okay, so we are literally right here in this stretch, right? So 10 o'clock is, I'm just going to mark it just so we can see. So that's 10 right there. So we have all of this that we're looking at. And I'm just going to hit replay just so that it keeps things clear. So when we look at this, we know we have that 15-minute level that we swept. It's the same level, right? We could just say it's this level right here. It's the same thing. Go back to the 1 minute. So what do you do in a situation like this? Well, once again, talk about 3 types of entry models that are on the table, right? IFVG, unicorn breaker block, swing failure pattern. So today, if you're looking at this, there is a unicorn right here. Right? You got a unicorn right there. You got the sweep that's happening here. Right? Okay, so unicorns there. You can see the daily EQs here. So we're below that level, meaning we're in discount. So if you're playing the unicorn model, let's just say your stop loss is at the low. Let's say you're aiming for +1. You're looking for price to snap back to that breaker block, which it does right there. And then you're looking for, depending on what you're looking for, 2R is usually what, most people have been doing. We know Matt often talks about aiming for 2R. If you know me, I'm always talking about 1R. Let's see what happens. And I think Matt took TP here, if I'm not mistaken. I think he took it right there. I think so. But see the way price has been moving? This chop, this is not a good sign, right? Not a very good sign. But if you hang true with your entry model, and I know when it comes to the unicorn, it's a set and forget approach, right? What happens is you escape the drawdown and price comes back up here, and you can make a choice, right? You want to close early or you want to let it run, or maybe move your stop loss to break even at that point, because we're past the hours of the kill zone. But what I'm trying to show you here is just how to set this thing up. H4, 15 minute, 1 minute, okay? So that was NQ in terms of the bias and how we put that together. I'll get into the IFVG stuff after. Let's go into GC. So GC today, my bias was that we had been rejecting off of a H4 volume imbalance. So I was looking for prices to go lower taking out the H4 sell side liquidity. So my bias is bearish. I'm looking for internal to external. Let's take a look and see what GC did today. So as we can see, get rid of some of this stuff. Okay, so as we can see, price successfully rejects off of the volume imbalance and goes straight to the external range liquidity target. So in terms of the bias, everything was perfect. Let's just quickly move to, I'm just going to move over here because I want to maintain that other chart. I'm just going to snap this on here. Let's go to the 15 minute. So at the opening, at the open of the market session for New York, you would have that bearish bias, right? Until the sell side liquidity is taken, which is the Asia low, right? We can see the H4 here, it's Asia low. So you would technically have a bearish bias until that level is reached. So if you are having a bearish bias when the market opens, you want to align 50-minute market structure. Just looking at this, though, it's not doing anything aligned with being bearish, unfortunately, right? When you look at any of these levels, there's no FVGs here, like bearish FVGs. There's no, swing highs being swept, like older ones. So the second price sweeps at 11, two things start to happen at this point. You either say that the kill zone window is closed, I'm not trading for the rest of the day, or maybe your window is 12. So you're like, hey, this level got swept. I'm now bullish. Let's see what can happen. So if we go to the 1 minute and we just examine what's happening here, it's similar to what we saw with NQ, where we're getting that really sluggish, slow price action. And we know the FOMC is happening on Wednesday. We get a nice spike down here, and then price moves higher and creates a swing failure pattern, and then moves higher until it basically rejects, right? And it runs out of momentum. So in terms of the bias, this is how I would have looked at it. The market structure on the 50-minute is that Asia low. And then on the 1 minute, we can see how price sweeps into it, creates that swing failure pattern, and then pushes higher. So depending on how you play this, like for me, I don't play a swing failure pattern. I would have been looking for that IFVG from a technical perspective. If you're looking for a unicorn, I mean, I don't know if I like breaker blocks this high. I prefer them to be a little bit lower to where the swing point is, because then your position is just too big, and then anything's possible, right? And you would have probably got stopped out on this run right here. So that was GC. And if we go to CL now, with CL, I was still feeling pretty bullish. This is what I had marked on on Friday. And price did dip below and then reclaim that level. So still looking for that move higher to take out the the buy side liquidity. And then this is what I was looking at today. So the thing with forming these biases is things can carry over from the day previous to the day current to the next day. But it's so important to always see what the most recent price action, like what is it actually doing. And that's kind of what I wanted to showcase here, was that the most recent move was a sweep of an old high. Sure, it's an internal range high. And then price dipping, mitigating the volume imbalance that was here. And it's also a H4 sell side liquidity level at the same level. So to me, I would have had that bullish bias because we swept bearish liquidity, we moved into bullish liquidity. I'm looking for that price to go higher. So let's take a look and see what CL ended up doing. And just taking a look at the chart, there's the sweep taking out the volume imbalance liquidity and the sell side liquidity off the ERL, and now price is moving higher. So if we maintain that bullish bias, let's go to the 15-minute. Let's see what happened with CL on the 50-minute at market open. So, and I'm just using the 9:30 open. I'm not using the 9 a.m. open. I'm going to use the 9:30. So, price dips into a pool of liquidity here on the 50-minute. So we'll mark that off as a 15-minute FVG, and then we'll go to the 1 minute. Okay, and if we look at this on the 1 minute, it's not offering any sort of breaker block. It's not offering the reason. Okay, so the reason I don't think there's a breaker block here. Actually, yeah, the reason. Okay, yeah. So the reason I don't think there's a breaker block. Sorry, I just mixed up what I was thinking. Is that if you look at these two lows right here, these are equal lows. So, 95.63, and then this is also 95.63. So even though there's a high here, it's not a valid institutional low. So I would not consider that as the breaker block, right? I would not consider that as the highest up close candle before the leg down taking liquidity. So then we look at this candle. But this candle is not lower than the next candle, even though there is a high here, like a swing point high. So same as this candle, I would not use these as breaker blocks per se. So if we're looking for like unicorns, there's none exist on the 1 minute. Okay. If you're starting to move to like higher time frames and things like that, that's a different story. I'm not suggesting you do that when it comes to unicorns. If you're trading unicorns, with that H4, 50-minute, 1 minute alignment, like stick to it. When we discuss things like IFVGs, for example, though, it's a little bit different, right? Because we're just looking for liquidity to be taken, and then we're looking for the cleanest IFVG setup based off of the 1 minute, 2 minute, or 3 minutes. Usually we're as far as I would go in terms of the time frames. That's as high as I would go. So when I'm looking at it here, yeah, I know that there's a huge IFVG up here, right? But that's not what I want to be trading, right? I want to be trading up here. I want to be trading down here. So you could move to the 2 minute to identify if there is some sort of an IFVG here. But the point of what I'm trying to say here is that even though the unicorn's not there, what we do get is that V shape, right? Which I often say that there's, you get swing failure pattern, unicorn model, breaker block model, which is a CISD, or you'll see some sort of like a V-shape IFVG model. And, 2 out of the 3 will also present themselves at the same time. So if we're looking at this in terms of like the 2 out of the 3, we know that there is a change in state of delivery here. I would label this as a change state of delivery just because there is a liquidity sweep here and here. If we use that level, right, sweeping here. It's not super close to where the price action is, right? But there is that sweep and then a reclaim. So I would consider this a CISD. And there's nothing wrong with CISDs, right? CISDs are amazing concepts to use, but it's just another way to trade, right? I don't trade that way. I would have been looking for that IFVG, but it's not there. So there you have it. NQ, GC, CL. We've gone from H4 to 15 minute to the 1 minute, and I showed you my bias from 8:30, and then we reviewed what price looks like at 1:30 in the afternoon. Anyone have any questions? All right, so that's done. Let's talk about IFVGs more in depth now. I know there's some people typing, so just maybe wait. Get a sip of water in the meantime. So Zanu says, do you only take IFVGs that are in reversal mode, or do you also take continuation ones? For me personally, I try to stay away from continuation IFVGs. Not to say that they don't work; they're brilliant. I think there's a key to trading them. And for me personally, I find I lose more when I take those types of setups. So if I ever do take a continuation play, there's a couple things that have to happen, and I'll make a note here for you. So the first thing that has to happen is price needs to have a draw on liquidity. You need price to reach for something, okay? And that means that the bearish, let's say we want price to go higher, right? So think of something like this. You need a draw on liquidity, number one. You also need to make sure that the previous structure, so in this case it's bearish, previous bearish structure has been invalidated, right? So you want price to have closed. One sec, let me just move this over. you'll have wanted price to have invalidated that bearish structure, right? So that could have been like a bearish IFVG going the other way, but then it reversed, right? The third thing is I want to make sure that, and this is like kind of a bonus thing, but I mean, I want to see that there's SMT with ES inside a fair value gap. If I see that too, that is a huge green light to me. So these are three things that I look for with continuations. I don't want to trade them per se. I'm not going to lie. But when I do see this, I often find that they work. So if you go and backtest, take these three concepts or criteria into consideration and then see how price moves. Also says, when taking 1R IFVGs, does drawing liquidity really that important? Because all we're looking for is that little push to get to TP. So you got to understand that, like, you need to still have a drawn liquidity, because the drawn liquidity is what's going to give price that push. Because if there is no drawn liquidity, then why would price push anywhere in the direction that you want, right? So even though you're not aiming for those extreme levels, right? Like, let's say, I mean, this does, move into the conversation for today, which is, how I trade IFVGs. Because for me personally, if we look at kind of the setups that happen in the morning, the daily EQ was my drawn liquidity, right? That was literally what I was looking to do, was to take the TP from there. I don't really care what happens beyond that, because my 1R was right there. So I would kind of position it that way. And then if I look at the left, I knew that there was a lot of liquidity here, right? So you always have to have a drawn liquidity. Like, liquidity is the most important thing for all of us ICT traders, really, right? You need liquidity to be swept, and then you need liquidity to be reached for. So never forget that. Okay, so how do I trade IFVGs? I'm going to kind of talk about how I trade IFVGs, and then I'm also going to talk about the setups themselves, because there was a couple that happened right off the bat. But when I show up to the market, the very first thing I do is I'll go to the H4. And this is exactly what I do, honestly. It's really not complicated. But the first thing I do is I go to the H4, and I just mark off higher time frame buy side liquidity and sell side liquidity on the H4. Okay, so that's step one. Step two, I go to the 1 hour and I do the same thing. And I don't care how messy it gets. I'm just going to do it because I'll clean it up after. So here's an H1 buy side liquidity level up there. And then if I go a little lower, there's one right here. Okay, and then if I go below that, now looking for sell side, this sell side liquidity level, which was at 4 a.m., ends up getting swept at 9. So I could mark this because I don't know if this swept at 9:30 or if this swept before 9:30. So I'll just keep it in there. It's a sell side liquidity level. We can obviously take it out after sell side. And then you can see that we have this H4 here. So that's the second step on the hourly. The next step I'm going to do is go to the 50-minute. And the reason I'm going to go to the 50 minutes is because now my kill zone pivots indicator will start to show me the the overnight session highs and lows. So any of those levels that I had marked off, if they are the same level as like an Asia high, for example, which is like right here, I'm just going to change that to Asia high just to make it more accurate, right? And then we can see right here, this H1, let me get rid of this. This H1 sell side liquidity level is actually London low. So I'm just going to switch that up to London low. And if I'm looking for previous daily high, that's right here, so don't have to worry about that. And then previous daily low is way down here, so we don't need to worry about that either. The reason you're seeing New York low here from Friday is because the New York open hasn't happened yet, right? So if I just hit next, now you can see it disappear, right? Because the open has now happened at 9:30. So if I look at that London low and the Asia low, which I forgot to mark, even though it's not technically an H4 or H1 level, I'm still going to mark that level off too. So it's an Asia low. So we know we have the overnight session lows here, and that's it. Your levels are now marked. If price were to decide to go lower, then I'll just start to look at what's happening with price. But because price is way up here, I don't need to worry about anything down here, right? Even though I know previous daily low is there, it's good to know where those levels are. I don't need to mark anything until price starts to show me that it wants to move in that direction, and then I'll start marking it if I need to, right? But this was what I was working with this morning. If you go to the daily check-in, which is part of the 20 trade challenge right here, daily check-in, you'll notice that if you ever want to see what I'm doing, what my bias is in the morning in terms of the IFVG side of things, not using higher time frame, like, you know, we talked about H4, 50-minute, 1 minute. If you aside from all that stuff, this is what I'm literally looking for. You'll see that every single day I'm going to post my check-in. You can go in there and take a look at it if you want, just to help you understand the way I look at things. But you can see right here, it's the same levels. And I'll just mark off what I'm looking for, right? Like I want to short off of these buy-side liquidity levels. I want to long off of the sell-side liquidity levels. So buy-side on the top, sell-side on the bottom. And then we, of course, have the daily EQ in the middle. Maybe there's a tag there to go short. Maybe it flips it to go long. That's like a wild card. I'm not going to really talk about that until it starts to happen. Because ideally, I want to see liquidity swept. Okay? I want to see ERLs being swept from the higher time frame, or like as long as they like work with that overnight session low and high, that's also part of it. So going back to NQ, we get that sweep here, and the next thing I'm going to do is wait for time. Like I'm going to wait for New York Open to happen, right? So sure enough, at New York Open, we are right here, right? So let's talk about this structure right here, because at New York Open we get that nice sweep with London low and Asia low. Okay, now I noticed this is the loss that Alice took. I'm sure there's a bunch of other people that probably took a loss too. I'm going to explain something to you about sizing of IFVGs here. So if we look at the size of this IFVG is 3.5 points. Okay, so when we're dealing with IFVGs, we want them to be, 5 points, 10 points. I mean, even a little bit bigger than that, right? Ideally, 10 to 15 points is kind of like a sweet spot. And the reason you want that is that you want enough space in that imbalance so that even if price were to retrace back into it, there's still enough space or liquidity in there to be swept. When you have a gap this size, I mean, it's showing us that there's not much liquidity there anyways, right? Creating that imbalance, like in terms of that gap being filled. Price can rip right through it, especially when you have candlesticks that are, like this candlestick at open was 72 and a quarter points. This candlestick right here was 40 points. So when you have a 3.5 point IFVG, like that's super, super small. For me, my limit in terms of the threshold is literally 5 points. Okay. Now sometimes I make exceptions to the rule if I see 4.75 or 4.5, but a lot of that will depend on what ES is doing, and also with market structure, like where's the drawn liquidity, how far away is it, are we creating if I want to go long, are we creating higher lows, things like that, right? You got to start to add other types of confluences to justify why you would take that. But if I see 5 points and higher, there's no thinking involved. It is what it is. So this setup right here, which looked really good to a certain extent, especially when you see this candlestick right here, ultimately then fails, right? So it looked good, but this is the problem with those small IFVGs. You want to avoid these, okay? What you don't want to avoid are the larger size one. Yeah, and this is just, I mean, we all make, I don't want to say it's a mistake or anything like that, but it just depends on what you have as part of your system. Like for me to have taken that trade, I would have broken a rule, right? So I'll just speak for myself. If I take that, I broke a rule, that means I made a mistake. And I'll only speak for myself in that situation. And I do see that there is a unicorn here. Yes, there is. But remember we talked about the bias. So if you're trading a unicorn, in my humble opinion, you have to use those higher time frame alignments. I really don't think unicorns can be traded unless you have proper alignment. Anytime I've traded them in the past years, I tried to get away with not having a bias, and it will bite you in the ass. Just like this one. This one would have bit you right in the ass. So if you're going to try to add the unicorn into the IFVG, just keep in mind to look at what the H4 is doing. Understand the bias, ERL to IRL, IRL to ERL. Very, very core foundation concepts. Move to the 15-minute. Is there market structure alignment? Yes, there was. And then start to look at things objectively that way. Okay, so that was that first setup. It was a fail. Gozzik says, for me, always avoid the first 10 to 15 minutes of the open. Lots of manipulation. That is truly like sound advice, because you got to wait for price to just like calm down a bit and start to show us a little bit more consistency in terms of movement, right? What we don't want to see is crazy wicks going off all over the place. You can't trade that. And if you just even waited, 10 to 15 minutes, that's literally right here. This is 10 minutes right here. Right? You miss all of this. This is 15 minutes right here. 50 minutes starts here. Okay? So let's just keep moving forward. Okay. So now that those overnight session lows got swept, I can remove them because they're no longer in play. No setups happened, but there is that H4 sell side liquidity level there. So I was watching this level very, very intently. I really wanted to, I'm like, if it does not happen here, I was like, the next liquidity was way, way down, right? Remember when we saw a previous day low, there was a little bit more liquidity higher than that, but that's a pretty big drop, right? You would have to wait for that. I say you, but meaning me. So I was hoping to see something form from here. So I'm going to hit next. And here's where we get into the next kind of topic of conversation, which is like, front running entries or chasing entries, whatever terminology you want to use. But, eyeing this, number one is, it's pretty clear as day, right? We got a nice liquidity sweep here. If we start to combine some elements of, our foundations, right? Liquidity sweeps, unicorns, breaker blocks, CISDs, things like that. But nice V shape here. Now, let's talk about this candlestick, okay? So this candlestick obviously closes way up here, right? Some people wait for confirmation. The problem with waiting for that confirmation is you miss the trade, because you can't really enter when prices closes like this. You then have to wait for a retrace or some sort of 50% retrace to start to dollar cost average into an entry, because you don't want to be entering way, way, way up here. Okay, that's one way to go about it. There's no guarantee price is going to dip back into that IFVG. Okay, also look at the size. Remember we talked about size? This one is 14.25 points. Let me just do it like this. There, 14.25 points. You see the difference in size? When you have something that's 3.5 points versus something that's 14.25 points, like, you get nice momentum. Okay, now when I was trading this candlestick, I was watching this candlestick, and there's a way to do it. There is an art to this thing. It's not easy. You have to have some intuition. You have to understand the risks that are involved. What happens with this is I'm trading on the 1 minute time frame, but as this candle's moving up and is going higher and then it's going lower, I'm looking at the countdown on the right, and I'm waiting to see when I get below like 30 seconds, I'm trying to see if I can front run the close before sometimes it just shoots up at the last second. So when you do it that way, say you wait when there's like 10 seconds left, maybe the candle is trading like around here. Entering here is way better than entering up here, right? So if you market order entry, there's also that risk. You don't know where you're going to get filled, but you're trying to get an entry lower than where the candle ends up closing, right? Because you don't want to be entering up here. You want to be entering as low as possible. So let's keep going, see what happens next. So then this is what happens. So for me, let me show the chart that I actually shared, because I did take the trade. Let's go to trade proof. put it in trade proof yet? Oh, I sure did. So if you ever want to see my trades for the day, just like in terms of like funded stuff, part of that 20 trade challenge, I post everything here. I'm very transparent. So it was about a 0.7R, but this is kind of where my entry was made at around 27,367. I really was trying to enter earlier, but I was like, I just kept my finger off the trigger because I wanted to just be safe, just given the way the market was moving. Now, what you'll notice with this setup is we also have SMT here. So let's pull up the checklist. Okay, so checklist comes up. This is literally what you got to do. You got to always follow your system, and the best way to do this is by following logic. My checklist says, are we trading inside of the New York kill zone? My window is very small, 9:30 to 11 for funded accounts. Are we trading on the right side of premium and discount? That means, are we above or below the daily EQ? Okay, now this goes back into how I trade IFVGs. We're just going through a much more in-depth, lower time frame discussion here. But are we trading above or below the daily EQ? This is how I form my daily bias on trading an IFVG, on whether I'm going to go long or go short. If we are below the daily EQ, to me, that is discount of the range. This is a dynamic level. One of our amazing community trading members, Finest, created this indicator. It's called the Dealing Range Indicator Pro. Super awesome. You can set alerts on it. One thing I like about it too is that the other indicator I was using, the offset, meaning you see where the placement of this daily EQ is, it was always way over here. So it was always like out of screen. I love that I can adjust the offset to make it closer. I know it's something super small, but sometimes the small things go the furthest, right? Like they go a long way. So for me, like that really was awesome. And then of course you have the alert. So anytime price starts to get within a specific range that you can define, you might get an alert if you set it. So if you don't know where the link is to that indicator, just do a search off of anything Finest has posted, and I'm sure you'll find it. I should probably share it in that trading IQ section of mine just to help other people. But nonetheless, we are on the right side of premium discount. Okay, higher time frame liquidity sweep. Obviously, the higher time frame liquidity sweep is that H4 sell side, right? We just rip right through it. Now I'm looking for a strong reaction. What does that mean? It means I'm looking for a price to literally bounce and do something like a V. What I don't want to see is price do this and then start doing this and then and then start to make a decision, right? I really don't want to see this. It's not to say it doesn't work, but what I want to see is strong reactions off of that level. That tells me that there's immediate liquidity being swept, grabbed, and the reversal is on its way. Now, the next part to that confirmation is the momentum. I want to see the momentum rip through the FVG to create an IFVG. Sometimes you're going to get a BPR out of it, right? And that's when you have an imbalance on the left and then you have an imbalance on the right? So it creates a BPR. But I'm not looking for BPRs. I'm just looking for momentum, meaning the least amount of candles closing through the IFVG or the FVG to confirm the IFVG. And that's what you see here, right? Nice strong momentum, strong body candles. I'm going long, so I want to see bullish engulfing candlesticks, right? You're getting that. Now, ideally, this candlestick, you got to wait to a certain extent when these candles are closing, because this looked like it was going to close and then it didn't. And this becomes a problem because when you get a candle that looks this bullish and then it just misses closing, the next candlestick can usually look like this, right? And you really have to, be able to market order entry before it closes. Now, what is singular? What is non-singular? Singular to me, in this case, this is a singular setup, because if I were to enter here, or even here, whatever, I need to look to the left. Are there imbalances on the way up? Right? So that means when price was retracing into liquidity, did it create a spike of imbalances? If it did, that means it's non-singular. If it's singular, that means that you're going to see LRLR. So what I want to see in terms of A plus is LRLR. If you start seeing LRLR, that's perfect. That's exactly what I want to see, because now I have defined levels that I know price can reach for. Okay, so that's singular versus non-singular. And then in terms of a clear draw on liquidity, it goes in line with the singular idea, because we're still looking for liquidity. For me, the liquidity was resting all here. And for me, 1R would have been roughly around the daily EQ. Now, I took my TP early because my entry was pretty shit, and I knew it. And I did risk a little bit more money because I knew what had happened. And I thought maybe if I can just catch like that burst that Alice was talking about, right? Like that quick push up, for example. As I saw the momentum here, it was really good. I thought maybe if I increase my position size, I can then hit my target, like my daily financial target, the goal that I have every day, quicker. And I don't have to wait exactly for 1R. So I was just examining or analyzing the way these candles were closing. And the thing is, when you see candlesticks like this form, and then the next set of candlesticks look like this, what does this tell you? What does it tell you? I'll put this question out to you guys. What does it tell you? It's going down, okay? What's another explanation for it? Like, what else could we say about it? A lot of buyers. So, yeah, go for it, Bobby. What do you got? Momentum could be slowing down. Exactly. When I start seeing wicks like this form, that's telling me that there's, and this is on the top, right? The top tail, that's telling me selling pressure. And this is part of the problem that we face today, is that usually when we have IFVGs like this, if my entry wasn't somewhere down here, then that means my 1R is going to get pushed higher. But I was trying to make sure that my 1R was around the daily EQ. So I'm waiting to see what's going to happen. But these candlesticks are showing me a slowing down of bullish momentum. These are selling pressure wicks. Okay, so once I started seeing this, and I saw this right here, my TP, basically like my target or my goal or whatever, was, I had hit that threshold. I was like, I'm out. Only because I knew my entry was shit. Right? Only because I knew my entry was not good. Because if my entry was down here, my TP would have been up here and I would have been laughing. Right? 1R, day's done. Now, my day is still done at this point. It's just I have to execute a little bit differently. And this is where you can't just always be mechanically driven with trading. You have to have intuition to this thing, okay? And it's not to say that your intuition's always going to be right. But what you have to try to do is use your intuition to put you on the right side of the trade, to put you on the side that keeps you safe, put you on the side that keeps you green, right? So for me, I just took my TP here. My day was done. And that was it. I don't need to do anything more than that. That's all it took, okay? Let's just go back to the chart. So that was this setup here. Watch what happens next. Okay, you see that? We went all the way up here, only to then go all the way back. And if my entry was like 27,367 or something like that, I mean, if I had my stop loss set to break even, I'm stop break even. So this is one of those things, right? Like, am I okay with being a little bit green? Or am I going to risk it and go for nothing? Or go for all, like all or nothing? If you're dealing with payouts, let's take Lucid, for example. Lucid, Flex, you just need 5 days over $150. Okay, 5 days over $150 to get into the payout range. That's all you should be caring about, is just getting green and hitting that threshold. Aiming for perfection is what's going to be, is what's going to cause failure. It's going to cause greed. We're never going to be perfect in this thing. And if I take a 1R trade and it goes even higher, I have to accept that. Does that mean I'm not perfect? Like, does that mean I'm perfect because I took my TP? Does it mean I'm not perfect? it's acceptance of what is happening on the chart, right? If I'm setting up a trade for 1R and I've already defined my liquidity and price is looking like it's not going to go there, I'm going to take my TP and be happy with it. And if price tricks me and goes higher, it's okay. Like, it's okay, because I protected myself. And that's the most important part, is you need to always have a good defense, because you don't know what price is going to do. And if you see signs of things that are telling you price is going to slow down, you have to like side with that probability. Okay. And that's why I just took my TP here. I had no idea what was going to happen next. Okay. I didn't know this is what's going to happen. All I know is I was seeing signs of slowing down, and I didn't like it. And I also didn't like it because my entry was, like I said, was a little higher than I wanted it to be. If my entry was down here, like I said, I wouldn't have even had a problem taking TP here, because I would have been 1R anyways, right? And if I was someone that was looking to skim profits, well, I would have skimmed my profits and moved my stop loss to break even. And then guess what? At about 10:30, my around here, maybe even here, my stop loss would have been tagged out for break even. So that's the thing with skimming profits, is you never know how much you're going to get, because you don't know what price is going to do. And for someone like myself, I found I have better results just trading 1R trades. I get the full TP of what I need. I don't have to worry about any of the retracements. It's well calculated. It's well defined. 1R trades have, if you trade IFVGs properly, should be somewhere in the 70 to 80% win rate. Okay. So that was the setup I took today. That was the first setup was the setup I did not take because the IFVG was too small. Okay. So that we've done all this. And I mean, literally, that's literally how I trade. That's literally how I trade IFVGs. It does not have to be any more complicated than this. And I keep showing the trades. I keep talking about the system, and it does not have to be complicated. Does it? It doesn't hurt to, of course, understand higher time frame market structure, just like I showed you with the higher time frame bias and aligning it that way. And I've talked about this in the previous session. It's like an exercise for me. It's like warm up. Gets my brain thinking, gets me, understanding what price is currently doing, or like what to look out for. But I don't necessarily need to use that to take this type of a trade. Okay. What's up, Mr. Spaghetti? Okay, so we did that. Now there was another trade that happens. Okay, let's just hit play for a second. Where is it? Okay, here it is. Okay, so right about here we have the next setup. Now I'm gonna go to so we have the New York low of day. Now I can mark these levels now, because after 11 o'clock the kill zone's over in the morning, and this level becomes very valuable. Sometimes it even works as being a key hourly level. As you can see here, it's an hourly level, right? Let's go back to the 1 minute. Let me get rid of some of this stuff. Okay, so what was the next setup? So right here, I was looking at NQ, and I'm of course, the fundeds are all locked up. I'm now moving on to Eval, because I just want to see what's going to happen up to about 12. And I did see this level. So I'm watching this, and I see the SMT form. Now, I have another screen that I use. It's a split screen. And the reason I like to use this is because I want to always know what ES is doing. It's very important for us to understand where price is currently located on the chart, and then in relationship to like what that looks like with NQ. Okay, so right about here where we have the SMT form with ES is sweeping the New York low and the Asia low. Okay, NQ is not. Quick and easy test. What does that tell us? What does this bullish SMT tell us? Anybody? For 50 points. New trend? Yep. What about strength? I'll give you a hint. What about strength? NQ is stronger. Exactly. So why is NQ stronger? NQ is stronger because it's created a higher low, whereas ES has created a lower low. So you now have a cracking correlation, and NQ, exactly, guys. NQ is leading to the upside. NQ is giving us a hint that a reversal is potentially about to happen. Now, this gets to the next part of the conversation. Setups with SMT where NQ is the stronger pair. I am someone that likes to trade NQ. I don't like to trade ES. And I say like, but I just mean it's my preference. So what do I do in a situation like this? Well, if I'm trading funded, there's two things that can happen. Number one, I don't take this trade no matter what. I wait for the sweep. Okay, so maybe I have a hard rule. I'm waiting for that sweep. I don't trust what ES is doing. That's one way to go about it. Okay, but what can happen with something like that? Well, I can miss the whole setup entirely. Okay, and that's what you kind of see here. Okay. Spaghetti says, I actually thought that ES may have had dragged NQ down to sweep the New York low before pumping. This is exactly what I was thinking. And that leads to that connects to what I was just saying, where it's like, I don't trust what's happening on the chart. And if I trade NQ exclusively, I need NQ to sweep higher time frame liquidity. Otherwise, I technically can't take the trade. But seeing that there's SMT here, this could lead to the second option. The second option is because ES has swept that level and now there is SMT at the lows, what happens next? Okay, so if I look at NQ has a really, really nice IFVG form right here. I'm just going to turn the indicator off because it's really messy. So you have a really nice IFVG here. Okay, and the thing is, price closes way up here. So let's just mark that down. Let's say you entered there. Now, where would you put your stop loss? And we talked about this last week, right? And I have a suggestion document in the Trading IQ section. You can go check that out. There's a few ways you can do this. The first way is you're looking for like a few points below the FVG. The second thing is maybe you're using some sort of market structure. So if I look to the left, there's a sweep here. Maybe I want to, okay, so I'll use that level, right? That's a second way to go about it. Third way is just looking at the clear swing points at the lows, right? So maybe it's this one, maybe it's this one. The problem with when you start to move your stop loss even further from entry is it pushes away your TP price too, right? So there is that risk that's involved. Now, if you look at NQ, even if I had used the full extension risk, I would have still hit 1R. And this is a really nice trade, okay? However, if I use the tighter stop loss, let's say I use the stop loss here, that 1R trade now shows almost a 2R trade in terms of that same template of the setup. And then if I move this a little lower down here, it's about 1.6, right? So you can see the variances that are involved. What I typically try to do if I'm in a situation like this is I try to look to the left and observe where the liquidity is. Because the goal is to try to take my TP where the liquidity is located, not beyond where the liquidity is taken. So if I even have a stop loss down here, I'll look at the points. Okay, it's showing me 37 points. That's okay. I mean, it's not too bad. But where's 1R? 1R is just up here. And if I look to the left, it's still perfectly in line with all the liquidity. So if all I'm doing is looking for 1R, then this setup gives me enough wiggle room to the downside in case it goes against me. And my upside's still also protected too because I'm taking TP right where all the liquidity is anyways, right? So this is how I would have looked at NQ. Now, I'm not saying I took NQ because I didn't. I took ES. And the reason I took ES on Eval was because it was cleaner. That was the only reason. NQ to me was just, I mean, I already traded NQ earlier, and I just did not like how choppy things were and how messy it was. And plus, I felt all day ES was leading the way, truth be told. So I thought, if ES is showing me a clean setup here, okay, now let's just move to ES because it's the same setup. It's just, it looks different. ES actually does give us the sweep, which is what I want. ES does give us the IFVG, exactly like what NQ did. So no problem there. I also want to show you the close. Remember we talked about this close? Look at how high price closed above the IFVG here. Look at how high ES closed. And ES actually closes before NQ, right? Right here. And this is what I was saying. My gut was saying ES is leading the way. It's been leading the way the whole day. It's been dragging NQ down the whole way. You can see my cursor is on the entry. Look at on NQ now. Just look to the left on the left side. Look at where the cursor is. Hasn't confirmed. So it's not to say one's better than the other. It's just understanding the discrepancies between the two. And then figuring out what aligns more with your system, your criteria, your intuition. So for me, I felt way more aligned trading this. And, you could put your stop loss at the low, aim for 1R type thing. That's what you could do. In this situation, price goes up. You get a nasty retrace back to the scene of the crime, right? But this gives us the entry for NQ here. And then price consolidates and then goes higher. And I took this on Eval. And to me, this is a pretty textbook setup. This is what I'm looking for. So if I show you, let me just go back here for a sec. I'll just hit rewind and I'll bring up the checklist. So if I pull up the checklist, let's just go through that again. Now, I know this is outside of the kill zone. This is why I'm not trading on funded. I'm trading on Eval. I can take a bit more risk with an Eval trade versus the risk I'm willing to take on a funded trade. So this was obviously X out. Are we on the right side of premium and discount? We sure are. So it can definitely go long. Did we sweep higher time frame liquidity? We sure did. The New York low of day and the Asia low were both swept. Perfect. Strong reaction and good momentum at those levels. Well, here's your nice strong reaction, and then we have the momentum ripping through the IFVG, or the FVG forming the IFVG, right? Look at how many candles. The least amount of candles possible. This is what I want to see. Right? Nice and clean. Is there a clear draw on liquidity? So if we hit rewind a little bit further back, let's just go right here and examine where the liquidity is. Now, this ties into the singular question again, right? Right here, singular. If you look to the left, I talked about how I always like to see LRLR. That's where I want price to reach for ultimately. If we look a little bit higher, there's FVGs stacked here, right where the daily EQ is. So for me, all of this up here is liquidity. That's the draw on liquidity. Is this setup singular? It is, because directly above my entry in this area here, let me just put this on. In here, if these FVGs were lined up here, then that's a non-singular setup. But because LRLR is immediately in the way of my setup or after my entry, and the imbalances are above that, this makes it a singular setup. And actually a really good setup because there's lots of liquidity for price to move and take. Now, is there a higher time frame IRL? What does that mean? It just means if I go to the 15-minute, does this sweep tap into a FVG? Okay, so I can already see right here that there is a volume imbalance. I'll just mark that off. Okay, there's a volume imbalance. Spaghetti says, do you have a minimum size the FVG has to be for it to inverse? Yeah, well, for NQ, it's about 5 points and higher, double digits. I don't want to see like 30 or 40 points, but, 5 to like 20 is usually the most ideal. When it comes to ES, I really don't have a gauge on that number per se. But if I look at what's happening with price action on the day, and I measure the move, right? So like if the FVG is sized at, in this case, the IFVG was sized at around 1.75 points. And then if I look at the candlesticks that were moving before that, they're about 10 points. To me, the ratio is pretty good there in terms of the size itself. What I didn't want to see is like something that 1 point or lower. But seeing that it was closer to 2 points, I thought that was pretty good. Once again, in correlation to the size of the previous candlesticks, right? So if I'm looking to the left here on the 50-minute, there is a volume imbalance. If I go to the 1 hour, is there anything else? Nope, nothing on the hour and nothing on the 4 hour, right? Everything's been mitigated. So there is technically an IRL here because that volume imbalance counts. And you can see how it counts because look at the way the candlesticks respond to it, right? Look at that. Look at the wicks. So let's pull up the checklist again. We do have higher time frame IRL. And of course, we can't forget the last one, which is SMT. We already know that there's bullish SMT. So when I look at a setup like this, and I'm going really slow, but if you, like for me, when I look at this checklist, I can do it really fast, of course, in real time because I've had enough practice. But when you look at this, the only thing that's like going against my criteria is the time. Everything else is looking good. Totally worth it to take it on Eval. And I would never kick myself to say like, oh, you should have taken it on funded. My rules for funded are concrete. The best setups I know for IFVGs happen in between 9:30 and 11. What happens after that is lower probability. It's not to say that it won't work. It's just lower probability. And as a trader, you always want to put yourself in the highest of probability situations with accounts that matter to you. Now, you could say an eval matters to you, but you can take more risk with an eval than you would ever want to with a funded. With a funded, you want things to be A freaking plus all the time. And you want to just do that. You know, if like with Lucid, for example, you want to do it 5 times. That's it. If you can do it 5 times, you can get to payout. Over $150. Is this checklist proprietary? It's free. Just go to TradingView. I mean, checklists are all over the place in TradingView. If you just go to, TradingView, I mean, I can show you the one I'm using. I'm using this one. Checklist by TazFX with the trade score. I mean, this even has a score. I don't want to have a score personally because, like I said, sometimes I'm taking trades that might have an X here that are mandatory for funded, but for eval they're not. Score is irrelevant. But I will say this: if I'm taking a funded trade, the first 6 things on my list here are mandatory. This is mandatory. Okay, and like I said, there's nuances to this. If you want to know what the nuances are, go back to my channel. Go back to Trading IQ and go back to my game plan and read the notes here. The IFVG is less than 5 points and also greater than 40 points. Skip the trade. Read all this. These are the nuances. And then you put everything together, and hopefully you get a good trade. And I've been sharing loads of trades that I see play out as fast as I can in my channel. If you're not following it, I highly recommend you do, because that's literally where I'm posting all day long. I'm not posting in the Gen Chat anymore because I just don't want to clog it up, and I don't want people to be confused with things. If I say something and it confuses you or makes someone second guess themselves, I just don't want to put anyone in that position. So I'm going to stay in my lane. I got my own little thread here, and I'm literally just going to be posting in here all day long, as long as I trade. So, that's actually a really good idea, Spaghetti. I'll have to talk to Nate about that, because then I could just, anyone that has my tag, I can just put that in there and then have that set up, and then you would get pinged. So I mean that's such a good idea. So thanks for that. Appreciate that. Just go back and read everything that's here. Like, I'm posting so much stuff in here because it's the stuff that I think about. I literally just started that thread last week. I already have 210 posts in there. Like, just think about that. Like, I'm going to town on this thread. I'm not holding back. Okay, so I think we covered pretty much everything I wanted to cover for today. Does anyone have any questions about anything I've talked about? I don't think I missed anything that I wanted to talk about. What we could do actually is just take a quick look at where price is right now. Let me just delete everything off my chart, and I'll just, do what I normally do. I appreciate that, Zanu. Thank you. I appreciate you guys all being here. Appreciate the support. So H4, nothing. Did I trade the unicorn model? I used to trade the unicorn model when I was learning ICT, and that was courtesy of the goat of goats, Matt. I learned how to trade all that stuff through him. I learned about ICT concepts because of Matt. He put it all together for me. He's the goat of goats. Prior to that, I was having a hard time understanding liquidity. I was having a hard time understanding, bias. Like I could never go to I could never go to a blank chart and understand what is happening. How about I put it to you that way? But studying off of Matt every single day, watching his live streams every single day, and I earmarked the live streams that I felt that resonated with me, that taught me something. The thing with Matt is a lot of his teachings are repetitious, similar to kind of how my teachings are repetitious now with IFVGs. But there's a reason for that, right? Because you're trying to instill a repeatable set of concepts that are ingrained in your head so that when you see price action move aligning with that criteria, you're not ever going to second guess what you're seeing. You're just going to act intuitively to it with instinct. So that's where I learned everything. Was the unicorn profitable for me? The funny thing is, okay, I'll put it to you this way. Is a 50 to 55% model profitable at 2R? It's a rhetorical question, of course. The answer is yes. But what makes a model unprofitable? If a technical model gives you 50, 55%, what could make it unprofitable? You need more than 1R? Okay. How about I tell you it's not technical? The problem was me. The problem was FOMO. The problem was panic. The problem was comparing myself to others. The problem was bad risk management. Nothing to do with the technical. Everything to do with all the stuff that's inside my head. Greed, right? Oh, man, I apologize, Daniel. I'm not trying to describe you, bro. Yeah, comparing is the worst, man. 100%. 100%. Yeah, it can bring out a really, really ugly side to you. So that's what happened to me. That's what made it unprofitable for me. But the thing is, as you keep studying, as you keep growing, as you keep showing up to the live market and trading and studying live price action, things should start to make sense. And what that means is you should start to understand, a model that works best for you, or maybe how you're able to interpret the market in this specific way. Some people need a lot of complicated steps. I've seen this with other traders, and I'm not going to name any traders' names, but I've tried to study some other really, really, successful traders that are in the market. But the concepts are just so complicated to me. But for some people, they're not complicated. They make 100% sense. And I've had conversations with people I know who trade those models, and I'm like, man, it's so complicated to me. And to those people, it's like, your model seems too easy. It's so easy that I don't have faith that it should work because it's like too easy. And that's actually what's been told. It's like, that's it. It's that simple. Like, that's all you're doing. So some people need more complicated steps for it to make sense in their head and allow them to take that risk of like hitting the buy button or sell button, right? For me, I've always looked at it like I just need something that is stress-free, the least stress-free, or the least stressful, I should say, and not complicated, quick. I want my invalidations to be quick, and I want my TP to be quick or quicker. There's nothing worse than having a 5-minute unicorn setup that takes 4 hours to play out only for it to hit your stop loss. And you're just sitting there watching the screen. Does that sound like anybody? Because that was me. That was me. And what does that do to you? You sit there for 4 hours. You hit the criteria of your setup. You did everything you're supposed to do. You read the price action, we'll say perfectly. You entered perfectly. You sit there for 4 or 5 hours. Price goes up. You're at 1 hour. It goes down. You're now in drawdown. You go back up. You're at like 1.5 hour. And then it goes and it takes you out stop loss. Psychologically, you keep doing that to yourself, that's going to have some sort of an impact on your way of thinking, in my opinion. And that's what it did to me. I'm not saying it's going to happen to you, but that's what happened to me. So I learned something about myself in those moments, that I can't sit in a trade for 4 hours. I need something quick. So that means I have to go down to a lower time frame. Right? So even if I'm trading a unicorn on a lower time frame, it's still too long for me to take, believe it or not. And I often if I get front run, I hate that feeling. I don't like to be front run. Imagine doing all the work of showing up, labeling your charts, marking the higher time frame, marking the 50-minute time frame, waiting for time. You get your setup, and then you're front run. And then price goes 100 points. That's another type of kick in the gut, right? Or punch in the gut. That as a unicorn trader I had to go through, and I did not like that feeling. So I learned something else. How can I market order entry with a trading system? Enter IFVGs. IFVGs to me answered all those questions immediately, because it got me in the trade earlier than a unicorn. It got me out of the trade earlier than a unicorn. The trade is going to invalidate or win faster. I don't need 2R. I need 1R. I've shared trades before where I hit 1R in 37 seconds. I think that was the fastest trade I ever had, 37 seconds. Sometimes it's going to be longer than that, right? Sometimes it's going to be 8 minutes. So usually the window is the best ones happen within 5 minutes. Then the next class or series of FVGs go between 5 and 10 minutes. And then if it goes beyond that, then I know that there's, it could work still. It's just I know that now this is a setup I'm going to have to fight with. And those setups are the ones I don't like. But they do happen, but not as frequently as the faster ones. Like the best ones, like I said, are usually 5 to 10 minutes. Usually 7, 8, maybe 9 minutes. And then the best ones are 37 seconds, 1 minute, 2 minute. To make 1 hour in 1 or 2 minutes is insane. That feeling is you would look at it as a feeling of having euphoria, but for me, it's gotten to a point where it's not euphoria anymore. It's I feel like the market is rewarding my good behavior. I did all the things I'm supposed to do, and now the market just rewarded me. You know what I'm saying? All that work I did was worth it. That's the payoff. So I'm not all euphoric, oh my God, I hit a trade in 37 seconds. I'm damn straight. Because I know that those are the best ones. That's why I'm trading this. Yeah, Spaghetti, man. All these are uploaded to YouTube. As long as there's no glitches in the video, and sometimes my computer, I gotta get a new one actually. I need to get an actual desktop, not a laptop setup. I just got too many things running, but I have to close a lot of things down to set this up. But I do post them, and if you go to the live stream section in my channel, they're all there, and I labeled everything there, so you can kind of fast track to what you want to read, what you want to see, and what you don't want to see, right? Whatever applies to you. So I appreciate the kind words though. So let's just look at the 1 hour. Yeah, I mean, even the afternoon right now with the 1 hour, we're just kind of hovering inside of a hourly bearish FVG, and ideally, like I said, I need liquidity to get swept, right? I need sell side liquidity to be swept, or I need buy side liquidity to be swept to even want to consider taking a trade. Can I get riskier and start using 15-minute levels? Yeah, I mean, I could, but I know that for me, the best ones are the hourly. So it's better to be patient and wait. Yeah. Oh, sorry, Spaghetti. Yeah, the thing. Oh, I should also tell you this. So all of these recordings that we're doing, they're just for you guys. This is just for us. All the videos that I like, these replays that are on YouTube, are all unlisted. So you can't find anything like this if you're searching for it on YouTube. The only way you're going to get access to this is if you're in this Discord and you know about it. And I like to just keep it small. I'm not looking for all the fame and all the accolades that I see with a lot of people on Twitter, and all the power to those people, of course, no judgment. Just for me, I'm more into the smaller side of things with the community, and what that allows me to do is engage with people who are like-minded like me, and appreciate just anything I have to say, right? Like the last thing anyone wants to do is have a live stream and talk to people that don't like the person who's live streaming and just shit on them. And the thing is, when you go on the public side, you're going to get all walks of life, and I really don't need all that. Like, I don't want that kind of headache. I applaud Matt for being able to withstand all of the crazy shit I've seen him have to take. Like, it's just, I don't know, man. I don't know how he's dealt with it. For me personally, can't do it. It's just like, it would just impact me too much. I would just not feel good about myself if someone was just attacking me for no reason, just because they are having a shitty day, for example. Like, I don't want to be involved with stuff like that. So that's why I keep a small, tight community here. People want to show up like yourselves. I really appreciate your time. I appreciate you hanging out with me. And then if people can't show up and they want to see the replay, that's great. Like, it's there for you as well. So yeah, anyone have any other questions? If not, we'll wrap it up there. But I really do appreciate everyone's time. I know I've said it a number of times, but it is the truth. I really do appreciate your time. I try to give as much as I can here and share like anything I see that makes sense to me that comes up. Sometimes it's like it happens in real time, but my goal is just to, like I said, plant seeds, and you can do what you want with those seeds. You know what I'm saying? Like, if trees grow on those seeds, then beautiful, right? So yeah, appreciate that. Thanks, Bobby. Thanks, Zanu. Thanks, Jacobit. OG Trade, appreciate you. Yeah, and God bless you guys. Have a great Monday. Make sure you take some time to yourselves. Do things for yourself, like whatever that is, right? You don't know why this live is for free? Well, money isn't everything. Money isn't everything. All right, guys. Happy wheel. Peace out. That made me laugh. All right, guys. Peace out. God bless.